The hidden advantage of the patient investor: energy saving. Investing is often discussed in terms of information, analysis, and strategy. However, there's an advantage that most people overlook. A patient investor saves mental and emotional energy, and this saving is as valuable as the return in the long run. 1. Decision fatigue. There's an important concept in psychology literature: decision fatigue. Roy Baumeister, who studies behavior and self-control, has examined this concept in detail. The basic idea is this: the human mind does not have unlimited decision-making capacity. Every decision consumes cognitive energy. The quality of decisions decreases as the day progresses. Now let's adapt this to the world of investing. Looking at the portfolio 15 times a day. Thinking, should I sell? With every dip. Saying, should I increase? With every rise. Each of these is a micro-decision burden. A patient investor, on the other hand, determines a strategy in advance. Does not make daily decisions. It doesn't deplete its energy. This is an invisible but powerful advantage. 2. The cognitive cost of constant control. Financial markets are inherently volatile. An investor who checks frequently experiences increased microstress, rising cortisol levels, differentiation of focus, emotional ups and downs. This cycle produces mental exhaustion over time. A patient investor, however, accepts volatility as part of the system. Less control equals less stress. This is not a matter of comfort. It's a matter of performance. 3. Emotional energy leakage. Every price movement produces an emotional reaction. Drop anxiety. Rise excitement. Side market impatience. Each of these emotions consumes mental energy. Daniel Kahneman, known for his Nobel Prize-winning work in behavioral finance, shows that the human mind is prone to a fast and emotional decision-making system, System 1. An investor who trades frequently constantly lives within this system. A patient investor does not produce emotional reactions, relies on conscious strategy instead of an automated system, reduces energy leakage. 4. Focus. The real value is here. Energy saving is not just about not getting tired. It's about directing energy to the right place. An investor who constantly buys and sells focuses less on their work, allocates less mental space to their family, struggles to make long-term plans. A patient investor, on the other hand, can focus on increasing income, can dedicate time to self-improvement, maintains quality of life. This indirectly affects investment performance, because increased income plus discipline equals long-term growth. 5. Trading frequency and performance. Brad Barber and his colleague Terence O'Dean, known for their studies examining individual investor behavior, have shown that investors who trade frequently, on average, achieve lower returns. Why? Transaction cost, wrong timing, emotional decisions, overconfidence. But there's another unseen factor. Constantly making decisions lowers mental quality. A tired mind makes worse decisions. 6. Patience equals energy efficiency. The advantage of a patient investor is fewer decisions, less stress, less emotional fluctuation, higher mental clarity. This is a kind of psychological efficiency model. Just like a fuel-efficient vehicle, it's more advantageous in the long run. 7. Compound effect in the long term. Energy savings accumulate over time. Fewer mistakes, less panic selling, fewer unnecessary transactions, less regret. This is not just a monetary, psychological compound effect. And perhaps this is the greatest advantage of a patient investor. They don't wear out. Conclusion. The hidden advantage of a patient investor is not just time. Energy savings. An investor who conserves their energy, thinks more clearly, makes fewer mistakes, stays in the game longer. Financial success is often not a race of wits, but a race of resilience. And resilience favors those who can conserve their energy.